The stock market, the economy, and everything in between hinges on one thing, and that is the inflation rate. Of course, we are seeing interest rates where they are as the Federal Reserve is trying to get inflation in check to their 2% goal. But there's one part they haven't told you about, one part that everybody seems to ignore. That's what we're going to get into today. I will show you that data and everything surrounding the economy. How does that sound? Let's begin. Here we have it. First news is that the tech sector, which has led the way with more than 200,000 job cuts since the tracking began in October, there's actually less today because the belief is that they have stopped cutting due to the fact that they have unwound most of this, the overhiring. They went in head first, started hiring more people, Amazon being one. They hired over 1 million people. Over 1 million people. So of course now they're cutting about 60,000. What I can tell you as an Amazon seller, I sell a lot of products and right now things are very slow. Let me tell you, very slow. So I don't know if that is related, but I just want to let you know that somebody at Amazon, please, you got to fix your stuff because this is making the game much harder. Now, what we're seeing is not unique to Amazon. It goes on and I want to show you this. Here we have it. Microsoft cuts 276 Seattle area jobs. Binance lays off over 1,000 employees. You see this repeated over and over again, okay? Many different companies are cutting jobs. It's not just in tech. It is all over the place. Then we have this showing us a company called Leslie's. You may not know of them, but they are dealing with pools. Now, pools are something that is considered to be discretionary. You don't need a pool, but when you have some excess cash, just like in the movie Christmas Vacation, they want to put that in because, oh, he gets his bonus, now he can install the pool. But what happens when you get laid off? What happens when you get your hours reduced? What happens when the cost of that pool is maybe 30% more than before? Maybe it's double. Who knows? With all the labor and the parts and everything. Well, suddenly people start saying, maybe not this year, maybe next year. And so they push that off, or even just uncertainty in general. So that presents itself with an issue right now. This company has said specifically, this is the biggest in all of the US. They said that, well, we're hurting bad as a result of the slowdown. So that's a little bit of anecdotal evidence. And that's what it's all about. You have to search and read between the lines in order to understand what's happening in the economy. You're not going to get it from one stat. But if we want to look at the stats that they show us, which is the critical aspect of this video, well then, how about this? I'll show you right now. June CPI print was likely the last for favorable year-over-year effect. You got to remember this. When we're talking about inflation, it is a year-over-year statistic. So, of course, on the way up, it looks extreme because inflation was in the negative. Inflation was down. And then year-over-year, you start adding that up. But at a certain point, it starts going the other direction, right? And now we are at that pivotal moment where inflation peaks out and then we come around the other end. Now, nobody knows, of course, where that could be in the coming months, but there are some things that are very sticky, as they like to call them. And those are the predictions. You could see, where are we going to be at? Nobody really knows. But we got to do this month over month. So the thought here is that on a month over month basis, we could start seeing some increases. We don't know. But what are some of the components that right now are still going up? It depends on where you look at it, but food is still an issue. Energy is still elevated compared to where we were, let's say, pre-2020. So natural gas, for instance, down from the peak, but still elevated. We have, in many areas, I've heard from you, gasoline, still too pricey. Other things could be seasonal, of course. But you got to understand the other factors when we talk about inflation in the workforce. So all the labor costs are certainly higher than they were. There's no question about that. Some people are getting screwed over. Okay, let's admit that. But for many businesses, they just cannot afford it. They can't afford it. So they are working with less people. They are laying people off. They're reducing their hours. People are still working, but in many cases, they're working two jobs. How many people do you know? You know, not just the people in the mentorship, all of the people that I have in the mentorship group are looking at, for the most part, are looking at getting a secondary income, getting some passive income for different reasons. But let's be honest, we need more income. No matter how much we have, it's always good to have more. So if we have free time, if we have some available time, instead of scrolling through Instagram, why don't we use that to bring in some income? Certainly. But a lot of people need it. There's a difference between wanting it and needing it. And now the growing number, look, when the average person making $34,000 a year in the US, median salary, you've got a problem. Okay. You've got an issue. Imagine the household income is super low and we need to get that up. We need to do what we can. So people are taking on second jobs, but it doesn't fix the initial problem. The core issue is that things cost too much simply because of all the devaluation of the currency. If we're not going to admit that, we're never going to know. Worst American city for pensions confronts a $35 billion crisis. Brandon Johnson sets out to find a sustainable pension funding. Mayor is against hiking property taxes. Of course, that's right. Don't hike the property taxes, even though they will. You could see it. Chicago, Chicago, Chicago. Now, Illinois, I've covered many times before. Kentucky, I believe, is in a terrible situation. These areas are not going to do well. Their pension shortfall continues to get worse. And if you're relying on that, you're going to get hurt at some point. Are they going to bail it out? They say maybe they will. Hey, they bailed out a lot of student loans. Why not the pensions? Pensions actually in 2020 got a little juice, but it's unsustainable. And when that gets a bailout, you're paying for that. You understand that you are paying for that. Maybe not directly. Maybe you're still going to get it, but you paid from that corner, filled in that. I mean, it doesn't matter. Come on. So what do you got to do? Well, there are definitely some suggestions. You've got to, of course, increase your income, increase your self-sufficiency. That's really important. I talk about that in the Discord as well. I talked about that in my books. I mean, I've got playlists. There's so much, but I want you to know about these things. HELOCs, that's home equity line of credits, you could see gain popularity as mortgage rates rise. Last year saw the most HELOC origination since 2008. All right, not where we were, but the simple matter of fact is as the mortgage rates have gone up, people are looking for more attractive ways to get some debt. They say, hey, I got all this equity tied up in my home. I'll just use that. And that's not a good sign, of course. I don't believe that is a good sign. It shows you that people are cash strapped. A global subsidy war keeping up with the Americans. Washington's allies in Europe and Asia were initially outraged by its new industrial policy. Now they are scrambling for ways to catch up. Of course, we got subsidies going on, and one of the key ones is with the semiconductors. So they have this CHIPS Act and they want to build semiconductors for national security purposes. This creates opportunities. Whenever you see the new law going in, somebody's going to win. There are opportunities. I'm considering starting a newsletter. In that newsletter, there will be information like this. So like a new law gets passed, you're going to get an email and it's going to say, these are the potential winners as a result of that. If you're interested, that is something I'm thinking of. I'm not doing that now, but if that's something that you are interested in, let me know, okay? It's not going to be like I had the email list before where I would send the video of the day. This is going to be totally separate. You're going to have economic data. You're going to have like opportunity data and potentially a lot of other stuff. Let me know. I'm interested to know. But basically what's happening here is, of course, you're going to see this competitiveness start to appear around the world. There are opportunities. Some people are, though, some countries, some areas, some businesses, they're going to lose out. So we got to pay attention to that. And the people who are going to lose, of course, I think are going to be the ones that have been losing all along. UK GDP, mortgage payers, worst fears are likely to come true. Same situation in the UK as with Canada, as with other places. Cycle of interest rate rises are expected to continue after better than forecast economic data. So this is coming through. It's saying, hey, labor market's strong. As a result, we can continue our policy. That's the key. If you look at it with the Federal Reserve, they're looking at specific pieces of data and they're saying it's still too strong. We got to elevate, we got to push our interest rates up. That presents itself with an issue to the ongoing tightening, which has been a concern for investors and even in individuals because of their cost of borrowing. All right. And then we go this last part here. As the big banks earn more from lending, the question has not. When will depositors see the reward? Well, it's finally starting. The reason I mention this is that people are trying to keep money in their bank and earn something. This is not the way to do it. If you want to keep it there because you believe it's safe, that's a different story. But trying to earn from a bank, not a good way. The stock market, you put it in there not to make money. You're not going to get rich. Very few people over many decades get rich from the stock market. That is a place to park money over a long period of time and utilize that to basically keep up with inflation and hopefully more. That's the stock market. Real estate, it's about 4 different ways. I've got a video about that in my playlist, financial education playlist. And of course, business is the one where you multiply your money. So these are the things, you got precious metals, different types of commodities that hold value over long periods of time. Each asset class has its own benefits, but please, we gotta know, don't try to actually make income from a savings account or a checking account. That's not how it works. That wasn't its intention. This, I just want to show you, if you want details, if you want information, if you want to actually put in a request, the Discord is where you got to do that, because that's the way I'm going to be able to reach you. You're going to be able to reach me, and I'll give you the details. I've got so much. If you look on the left bar, you're going to see so many different things that will be of use to you. You read through them, enjoy them. You got a request, let me know. That link is in the description. Hit that Discord. If you don't know what it is, just check it out. You just sign up. It's totally free. Check it out. I'll see you there.